Hello? You there? This is serious. Okay, guys. So, are you an investor? Are you a citizen of any Western country or any non-Western country? There are opportunities and there are preparations. Preparations are you need probably to diversify your supply of cooking and food and preserves. You know, we used to have rooms in the earth with big blocks of ice, keep everything good for 6 months. So what we're thinking of is building those rooms again, but you've got electricity, so it's much better. But you should build big blocks of ice into the room so if the electricity goes off, the ice doesn't melt for quite some time because it's quite big and thick and it's under the earth. So it's under your house, this room, and it's your pantry. So an earthen pantry. So if there's a supply shock or there's a storm and everyone's going to the shops, you don't have to worry about it. Just buy big amounts, buy big specials, stock up, rotate your stock, make sure you keep eating from it because you don't want to get too old. But every time there's a shock, you've got 3 months of supply. So you don't have to deal with the shock. And that's for veggies and meat. And herbs you can just grow in your garden, stop paying for them. You can grow in pots. And let's get to oil. So oil oversupplied, but petrol undersupplied. So you might think oil prices are low. Has not going to help. The government policy in America to keep oil prices low is not helping because there's wars, refining capacity is actually being blown up. And the refiners are making huge profits. So I looked at shares in refiners, maybe not petrol. It's a gas company. If this video gets to say 1 million people, there's a gas company and I can tell you all at the same time to buy it. Its book value is above its price. So even if it went bankrupt, you'd still get more money than you bought it for. That's probably the best buy you could ever buy. It's not something that you're going to make money from the price going up. It's, for some reason, it's a hated company. But what you can do is collect dividends. But the risk is very low for this company because the book value is well above the share price. So yeah, so they have more assets than the value of the share. That's awesome. And then you look at the PE ratio, profit to price of the share to earnings, and it's 13. And most people are buying companies with much higher PE ratios, and so I think everyone's a bit blind. There's definitely blind spots in the market, companies that you can buy that won't make you profit in the short run because there's no mania about these companies. But their dividends are like 5%, and they're a low risk company. You just sit on it, and that's my type of investing. I hate high risk investing. I hate the stress. I hate the movements that you have to watch. No, look for trends and look for turning points and buy companies that you never have to sell. You can take risks on companies, but then you got to make a sell position. So if the company is going to take forever to turn a profit, but it's a new company and people are betting on it. Occasionally those companies get like hundreds of % boosts, but then that's when you got to sell it, because then it goes back down. Like these companies, there's a lot of them, and they have some sort of technology, or they're doing some sort of research, but they're not able to make a factory and produce it and sell it, have a market. There's something wrong with their technology or their CEOs, or they're just not doing it, or their product is just never going to do it, and they brought it to market and they sold the shares without a product that's actually marketable. And so it's all speculation. So I'd rather just buy the companies, the big companies that have the cash in the bank, that have the assets, that have the turnover, and that have a share price that has not been boosted too much. So the PE ratio is low and the book value is not too far off. But if the book value is above the share price, that is, I would put like maybe all my money in there? No. Maybe like, nah. I would buy all my spare cash for this share. Not all my money, but my spare cash. If I could get a lot of cash right now, I would spend it as well on this share, because I haven't seen this before. And also wheat, maybe. Look at the trend. It's done this before. People boost it through December. The trend might happen again. It's slightly up in the last month. Wheat, CBOT on the New York Stock Exchange, or the CME, I forgot. Sugar. Oh my gosh, if there's war, buy sugar. If there's war, buy sugar. If there's war, buy sugar. They need sugar for war, because they got to give their soldiers food, and they make sugary things to give them that extra boost of energy to get over the front line. So they eat their little bars or whatever, and it's full of sugar. And so buy sugar. And I think there was some backwardation in coffee. Do you know what backwardation is? It's when the front contract is worth more than the later contract. That's good. That means you can buy and it will go up, because the supply is restricted and everyone wants to buy in the short term, so there's no demand for long term. But obviously when it gets to the next contract that expires at the next date, people are going to have that as a short term. So then the price will go high from the front contract, expire, and then they'll roll it into the new contract. So there will be a rollover. And that's what speculators do. So there's a whole bunch of speculators, by the look, in the coffee market, and they'll just roll positions. I wouldn't buy oil, because, yeah, if they can't refine it, it's just going to build up, because everyone's making oils. They're not going to blow up each other's oil, or are they? Then oil price will go up. If they blow up production of oil, interesting. But that's a big bet, because if they start doing that, everyone's just gonna, all bets are off. So like, they probably might have a few scars and wounds on the battlefield of oil, but I think they'll be very careful, because all need oil to fund their wars and their governments, and the government's getting serious about being in control, and population's getting harder to control, so they're trying to do their best, but they don't own anything, so their policies don't work because they can't get to the bottom of it, because they never actually get that really detailed, fine approach and mesh the problem properly together. Like it's there's gaps in the market or something, or there's some difficulties you gotta fix. You gotta fix it. But the strategic reserve in America, when they fill that up, yeah, it's creating demand. So it's actually raising prices rather than saying that we'll have more supply to lower prices. And the refineries, they can't do anything about the missing Russian refineries that have been blown up, or the Ukrainian refineries, or whatever other refineries have been blown up. So they might be able to keep oil down, but they can't keep petrol down, and that's the vote. So that doesn't make sense. Why are they even build a refinery if you want to keep the people happy? You don't have enough refineries, especially in Australia. If we had a refinery, Caltex share price I looked at, don't buy their shares, they're $40. If you bought at 20, which was this year, you would have made money. But I didn't look early enough because this oil thing's been going on for a while, so I didn't think about that at this. I wasn't thinking about investing at the start of the year, but if I was, I probably would have found that. And yeah, Caltex would have been a good buy before, but no, its dividend is like 1.5%. So you're not going to be able to sit on that. That's more speculation about how much money they might make in the gap between oil and petrol prices, or the crack ratio, or whatever you want to call it. So that's a speculative buy, and it's already been speculated on quite some time. So I wouldn't be buying Caltex, but there is other companies. I won't mention them, but I will mention them if this video reaches 1 million people or something, and then it's worth actually telling people, so it's not just a few people and then someone steals my idea and then makes a video and then gets their own followers. No, it's a good idea, but I need some more people to actually be interested in me, because this channel isn't specifically about anything. It's about me. I'm interested in nature, music, or piano, gardening, science, physics, technology, coding, and investing. But the investing I do has to be stress-free. Crypto is the most stressful investment. Do not buy crypto. Crypto doesn't pay dividends. You got to put it in some random place to earn dividends. People have to figure out how to work that technology. It's not that easy. A lot of people have figured it out, but then the exchange, something goes wrong because it's lending out the crypto and then it collapses or something, because I don't know what happens, but people say that they can't get their money out. So that doesn't sound that good for crypto. So I just traditional. If everything's going to get tokenized, you realize traditional's going to make the most money, because the token is the derivative. So really, the tokens are going to come from all the traditional assets. So the traditional assets is what you want to buy, because you'll hold the traditional asset rather than the token. But because everyone's buying tokens, it's creating demand for traditional assets. So you can either own the token or the asset. You'll still get the price difference, but there's more security in actually owning the real thing rather than the token. And to actually have a physical delivery of these things like gold. But I'm not saying buy heaps of gold. But what I'm saying is you got to consider that exchanges go broke, people do dodgy things. This is not just simple investing. You got to think about the risks. Like, why would you trust other companies? I can go into my bank. Why would you trust a broker? I can go into my bank and open up shares trading. The minimum is $500 for my bank to buy shares, and then I got to pay $30 for a transaction fee. So it's better to buy $1,500, so then the transaction fee is 2% of the value. So you only start with a 2% loss because you always got to pay the transaction fee. So you do pending orders. Don't go at market just in case someone does slippery business and you pay double what you're not going to pay double, but you're going to pay like 20 cents more or something, or $1 more, or whatever the price range is. You'll pay more if you buy at market. You want a pending order. Look at the depth of the market, the buyers and the sellers, and find a spot at the top where the buyers match the sellers and quickly do that trade. That's basically at market, but it's more stable just in case they move their orders. And you have to readjust manually. So normally you do it at the start of the day because the market hasn't opened, so you can look at the depth for a bit and position before the shares even trade, which is probably the easiest way to get into the market. Position into the tradable zone where the sellers match the buyers. At the start of the market, you're going to have to change a few times and check right before the beginning, and then you'll buy shares. Then obviously it will move in one direction. You either make a small loss or a small gain. But these are hopefully stable shares because you're picking shares that are unfavorable. So people don't really trade these shares compared to the big shares. So the price is good value, and it might range up and down about 10 to 20% in a year, but it just keeps doing the same thing. Like BHP, for instance, it goes between $38 and $50 for the last 5 years, paying the same good dividends, but the same price range. So you don't make money on the price, you make money on the dividends. I don't think you guys understand this. This is so easy to do. It requires a bit of research about their profit and loss statements, about their financial statements, and you have access to that through your bank. It will connect you to that because it's all released through the ASX. You look at the PE ratio, you find the fair book price, you find the debt to earnings, to cash in the bank, they have enough cash in the bank, and you make a calculation based on all those factors. Is this company going to survive if they don't make as much money? I.e., is the debt too much, and are they forced to continually grow to pay the debt off? Or are they a sustainable company with not too much debt? Or are they so big that the debt they can refinance? And so they're going to refinance it in the future anyways, and they'll just carry on. So I guess you got to start looking yourself. Why would you trust brokers and all that and pay for them when it's just simple maths? Like, this is what AI is bringing in, guys. That the future is just information. Everything's getting tracked, everything's getting monitored. Even you will become a commodity and a prediction. And your sort of commodity will be to do with advertising. How much people can make off you, and what your weaknesses are, what your interests are, and what words to say to you to convince you. They'll know everything about you. It's like witchcraft, I guess, because witchcraft back in the day was just someone saying words and getting people to do things that they didn't want to do, kind of like hypnotism as well. But what I'm trying to say is they can figure out based on all these little information inputs, and they're measuring more and more parts of you based on your interaction through your phone or your computer and the monitors and sensors that you've put in your house. Apparently even the robots, vacuums can watch you, and the Wi-Fi uh, bounces off you, and there's a program that can track people with Wi-Fi. So I don't think you guys understand that you can get all the information. The reason why people don't have it is the other problem. It's not organized. There's so much information. It's disorganized. It's mostly advertising. It's mostly fluff. Carrying on people that just make a big fuss and they make a big splash on the internet. But the real stuff is just the mass. So you just gotta find the mass and the numbers and not some opinions. And if you want to speculate, you have to figure out emotional opinions. But that's just nasty business, because that's just emotionally draining. So why not just buy shares that are mathematically sound and traditional assets? Just buy $10,000 worth of gold and buy it in like little bits. So if we ever have to trade in gold, that's just like the ultimate security. If you ever have to trade in gold, you want little coins or something. So you break it up, or little pieces that you can break up. And because gold is like cash, really, and you can cash it in any time at any store. Not really any store, but you can cash it in at the gold place and get cash. But if you had cash, the inflation drains it. Whereas gold, inflation does not drain gold because it's buying. But silver is even better because it's decoupling. People starting to realize that, hang on a second, silver is actually the most used asset because we actually need it in computing. And so you guys could even buy a silver mining company. Don't buy either silver blocks or the mining company to get the dividends. Do not buy the bloody moving thing on the computer that says gold price. I don't trust that. It's just like a certificate of delivery or something. I'd rather own a certificate of stock in a mining company, own their debt, that would be even better, or own the physical gold. But why would you bother trading on these highly volatile markets when you can just buy things in different cycles? You just gotta pick what cycle are we in. Okay, what's undervalued in this cycle? Okay, that's the mass. Do. Okay, buy it, sit on it. And monitor. I've bought shares just to monitor the market so I can see my portfolio is a basket of probabilities of different things happening in the market. So that if I did make a mistake in my assumption, I can update my assumption. But what I'm finding out is it's more just a mass, like it's just the value, and you're buying it at the right time when people are uninterested in it. That's why I'm not going to tell you the best share in the world, because then it won't be the best share in the world. But there's some shares that people have missed, and they're worth it because they pay dividends. And that's what you do. You make a continual income from dividends. You never sell your shares. And it's like having cash. It's a certificate. You could probably back a loan with your shares if you got enough shares. I think that's what rich people do. And you just borrow against your shares. And they're all dividend shares. And they're paying you. So eventually you could just live off your dividends. And it's all stress free. Thank you.